the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. The tariff increases announced so far have been significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close.
What do you... Translation, we don't know what the hell is going on, and we don't know what we're doing. What's going on, y'all? It's Mike Pro House Seller, man. Welcome back to the channel. Today we are back talking about the Fed. Yesterday they had their meeting. Are they going to raise rates, lower rates, keep them the same? As we know now, they kept them the same. And in his little speech, his little spiel, Jay Powell's talking about how there might be a little bit more of indicators of higher inflation. So if you see indicators of higher inflation, why would you keep the rates the same? Why would you not raise them up? Because you don't want to get fired. And in his little spiel, he's sitting there talking about how there might be some indicators of higher inflation due to the tariffs and whatnot. That's what they want to blame now. They want to blame the tariffs now. They're treating the tariffs the same way they were treating COVID. It was already going to happen anyways. This is just adding a little bit more gas on the fire, but it was already going to happen. We already had runaway inflation for the last 4 or 5 years. The little tariff thing that Donald Trump want to do now is not going to all of a sudden make things way worse than they already were. It was already a shit show prior. It's a compilation of shits added on top of each other to where we have this mountain of debt now. The real reason the Fed doesn't want to raise rates is because the headline inflation is $30+ trillion. If we raise the interest rate, you have to raise the rate that you have to pay back on that debt. That money that you're paying on the debt will take away money from all these government programs that these politicians promise. And they will be damned if they allow that to happen, because we know the game. You got to say whatever you got to say to get elected. This is in the way. So nobody really wants to raise rates. Even Trump. Trump is out here campaigning for lower rates. I already told you what would have happened if we had that. Whatever the price of things are today would have been double or triple if we had negative rates. Negative rates have to be the most cancerous thing in the world. That's when you pay the bank interest. You know, when you put your money in a savings account, I mean, not that you get any real interest, but every month they give you a little something. If rates are negative, it's the other way around. You pay the bank interest. And when you borrow money, they pay you. That's how little the banks want your money, because they print so much. So they don't want to raise the rate, because raising the rate will break the house of cards. And they can't have that. At least not on their watch. They know what has to happen. It just has to happen on somebody else's watch. And with all of this, it's like, it's still stupid. Jay Powell didn't really say nothing new today that he hasn't been saying like the last decade. They're just trying to kick the can down the road again. They're basically paying their credit card bill with another credit card. You're not better off doing that. And the people are getting more and more fearful of the dollar. They want to get rid of the dollar. Gold now is above 3,300, and it's just going to keep going higher. Even silver's catching a little bit of steam. I think silver's over $35 now, and everybody's complacent now. That's what happens. This is the type of stuff that happens. When shit is about to hit the fan, the politicians in action don't really want to do anything. They don't want to change anything. They don't want to do anything because they know the bad stuff has to happen. They just don't want it to happen on their watch because they're going to get unvoted. But they're just too scared to tell you. This is why you have to arm yourself financially. You have to educate yourself financially. You have to make smart investments. And most of all, you cannot listen to the politicians or else you're cooked. But that's it, man. Nothing crazy. Quick rant, man. If you stayed this long, appreciate you. You could like, you could comment, you could sub if you want. If you don't, it's all good, man. But I appreciate y'all, and talk to you on the next one.